Hi, Siphiwe. Welcome to VC Talk. It's my great pleasure to hear you. How are you?
Thank you, Max. Thanks for having me. I'm very well, thank you. How are you keeping?
Well, good. Thanks for coming. We are trying to get to find this good tips how the venture capital environment works and how to approach venture capitalists.
Yep.
I would like to start, if you want to give a short introduction about yourself.
Sure. My name is Siphiwe Nodwele. I am the Group Chief Executive Officer of Trident Union Partners. We're a South African-based investment company. We focus mainly in the technology space. My background is in M&A for big technology companies listed on the Johannesburg Stock Exchange. That's where I found my passion to actually find and meet entrepreneurs, understand what their businesses are doing, and also understand what technologies people are developing, especially here in South Africa and on the continent. That's really what we're trying to do to find the next big thing and also support entrepreneurs, because I think it's a very lonely space to be an entrepreneur. So if you can have partners like us who can hold your hand along the way and understand the perils of being in that lonely environment, I think you're in a good spot. So that's in summary, that's who we are.
Thank you, Siphiwe. You're right. Being an entrepreneur is a very lonely place to be.
That's true.
Hours.
Yeah.
Working office, home office makes no difference.
Exactly. It does make a difference. Actually worse if you're at home because you end up doing more work. So at least in the office, you kind of at least watching the time. At some stage, you need to go home. Whereas once you're working at home, you're in big trouble.
It does. Thank you so much. Let me start. In which area of geography do you prefer to invest? You said already Africa. Africa is very big.
Yeah, so I think for us, we obviously a South African business ourselves, so we obviously understand the market quite well. But having said that, with what's happening, especially in the fintech space and technology, we're seeing a lot of really interesting startups and companies coming out of the East African route. So for us, really, whilst we are located in South Africa, from a geographic perspective, I think we'd like to look at the whole continent, well, at least the English part of it, because that's in terms of the ease of doing business and understanding each other, that's generally where we would be most prevalent.
And how much you normally invest?
So that's an interesting question. When we started, we had the decision to make whether we're going to set our sweet spot. And I mean, anyone working in VC or private equity will tell you to do a $500,000 deal and doing a $50 million deal, it's just the same amount of work. In fact, the smaller the equity check, the more complex and the more work you actually have to do. So we generally shy away from setting ourselves a target, but we found that some of the transactions we do, the general size is around the $2.5 million to $10 million mark. That's generally what we're looking for. And it also depends where the business is from its growth cycle, whether we're talking something that's pre-money or pre-revenue or pre-profit, that will generally influence our check size that we can invest.
What exactly is not the size of investment, but the
equity stake?
The stage of the company we invest.
Right. So again, I think for us, just simply because of the limitations we have on the capital side, we try stay away from the pre-seed guys. I think that's going to be a bit difficult for us. We want something that's proven, that has a few customers that the market has taken into, something that we can see within our network, we can add value to that business and hopefully let them grow and scale. So we're not looking for someone who's starting something from scratch and has an idea on a piece of paper. We want something that at least has been tested in the market, not necessarily profitable and maybe not even revenue per se, but someone who at least has something that's got enough teeth that needs to get it to the next stage from a growth perspective. That's generally the easiest one. But also in terms of the South African laws, in terms of BEE legislation and being equity partners for that, we do look at the very mature companies. For instance, our first transaction in 2020, we did quite a large deal with Guardia South Africa, which is owned by Presidiad. And that was bought for over $660 million by Carlyle Group. in 2016, where we've come in as a partner for that. So whilst we're happy to look at the later stage deals, I think where we add value from an entrepreneurial perspective is finding those businesses that are in the sweet spot, that are just starting to gain momentum. They've got proven technology, they've got strong management behind them, and what they're really now looking for is that access to market, which we can assist in and scale up.
So in venture capital terms, we can talk about the late seed, early, AB.
That's correct. That's correct. That's exactly what we look for.
What are the top concerns, and where do you find conviction when investing? The company, the team, the products, for example?
That's sure. It's a very good question. So I think from a concern perspective, unfortunately, and this is why it's good that we've got people like yourselves who are setting up these types of conversations. I think a lot of entrepreneurs, especially the more technically sound they are, they lose aspect of the business side. And that's probably the most important thing. You know, everyone has a great idea, and there are many people out there who have great products, but ultimately it's your ability as an entrepreneur to translate that business idea into a tangible solution, and taking that solution and making it into a tangible business. And that in itself is a hard leap for a lot of people. And I think for me, it's finding that balance of the requisite maturity of the entrepreneur and the realistic expectations of what doing business is. Because some people think, oh, fantastic, we've built the prototype, we're now going to be the next unicorn. And that's not how it works, unfortunately. There is a lot of work and negotiations and meetings and different stakeholders that you need to get on your side. And that's where I think a lot of entrepreneurs get unstuck. They think just because they've solved this problem in their eyes that the whole world is now going to bow down and open every single door for you. But that's just not how it works. Understanding that competitive environment that you play in is important, but as well, you having the ability and the right team to take that across, I think is probably the most critical thing. Because everyone can have an idea and everyone can have a product, but to actually commercialize it into something that's going to be a real sustainable business, I think a lot of entrepreneurs are lacking in.
I do agree. I mean, we say, that's a pure common saying, ideas are cheap and execution is key. But exactly. You're right. I mean, for what I can see, talking to a lot of founders daily, and they have so much focus on the product, on the service itself.
Yep.
But they miss the management. They miss the way how to move an idea to the next stage, and from the next stage to maybe be a business.
And that's such a critical point. I mean, if you take just pure business, call it pure business principles, marketing, legal, accounting, those things are important. There's a reason why we pay lawyers and accountants the money we do, right? And never mind the marketers. I mean, they've got the best job of all. They sell pipe dreams to people, which is awesome. And that's where entrepreneurs almost miss that part, that it's business is not a one-note game. You know, it's a symphony of all these different aspects and all these different disciplines that make a successful business. And you as an entrepreneur to be able to identify the right people who can assist you in doing that. Sure, they don't have to be necessarily all be in your team. Many of these guys can be outsourced, but to do that cleverly with the limited resource pool, to get your idea to commercialization, I think that's part of being an entrepreneur, that fine balance of measuring where to spend the money, where to bring the right people in to get you to where you need to so that you can be successful and compete in the market.
I do agree. How important is face-to-face when it comes to investments? For example, is not being geographically close to the fund a limitation?
So I think there are a lot of businesses out there that have managed to be remote investors, and I don't know how they do it. Good for them. I just don't think we're that crowd. You know, for me, the first thing you need to go, and it just goes through this last point we just discussed about having that balance of the different people in the team. You also need to have chemistry, right? You need to convince us that not only are you the right person to be backed, but also you're the most passionate person and the best person to do that. And it's very difficult to do that over a screen. I think it's always important to spend a lot of time with the entrepreneur. And remember, these are human beings. We're all human. The business idea can come and go. There'll be good times, there'll be bad times. The question is, what type of human being are you? Because we're going to be stuck with you. Whether the business is doing well or whether the business is doing really badly, we have to deal with a human being. And I think there's just no substitute for that FaceTime and the dinners and the lunches and the long, difficult meetings and the long, difficult negotiations, because through all that, you get to see very different aspects of people. And for me personally, I always insist on knowing who your family is. You know, if we're going to be in business together, it's important to understand what's important to you. How important is your family? How do you treat them? How do they treat you? How do they respond? Because ultimately, this is a marriage in and of itself. And if we're not convinced that we can make this successful, I'd rather shy away. So for me, the personal aspect is critical. It's probably more important than the business itself. As you said, ideas are cheap. Everyone's got one, and everyone thinks they're going to be a billionaire. But ultimately, when that doesn't happen, who are you stuck with? And that's what I'm more interested in.
I never seen failing business plan in my life, but I see 90% of startup fails.
And they all go like this. It's all one way and it's to the sky.
That's incredible. How often do you like to meet the founders? Before, when they had to decide to invest, and after investing?
So for me, it's obviously whatever it is we're looking at from a business plan or a pitch deck perspective, that will give you an idea whether you want to meet someone or not. But generally after that, it's also the fascination and the obsession that an entrepreneur has with these product or service or solution, right? So for me, it's that passion that I want to come see through. A piece of paper will never do that. So once you're committed to say, hey, this is an interesting idea where we think we'd like to look more into, that's when you'd want to sit and spend as much time understanding how personal is the problem that the entrepreneur is solving for them. And I think if we can get through that hurdle, and it's all they do, it's what they eat, sleep, and talk about, and that's the number one drive passion, that gives you that warm and fuzzy feeling to say, you know, this guy's the right person for us to back. So for me, it's as often as possible. And locally, some of the guys know we don't mind taking our time before making a call on something, because that chemistry cannot be faked. There's no substitute for that length of time, getting to understand people, getting to understand their strengths and weaknesses. And unfortunately, an interview or a pitch deck with a paragraph on who the partners are just isn't sufficient. You've got to take as much time as possible to get to know the people behind the brand or the business or the idea.
I do believe so. I mean, the team it's absolutely essential, right? Without team, you don't do anything. If you don't know personally team,
exactly,
it's challenging. Piece of paper can give you anything.
And that's the thing, just on that point, Max, the funny thing is, if you can have a good relationship in the good times, that's what's going to get you through the hard times, right? If you've built a strong enough rapport with the individuals that there's honesty and, you're able to have the tough conversations, that's what's going to make a good partnership. But guys who just always look at the good side and the bright side, that's where many businesses become problematic, because it's been backslapping and high fives all along. And suddenly when things go bad, no one knows how to deal with each other. And that's what I find becomes such a waste, because you spend time and money investing in people. And when things go wrong, the relationships just weren't there in the beginning to survive whatever turmoil that any business goes through. And they all go through them, whether they're the super successful, massive unicorns or the guys who end up closing down. Every single one goes through the same challenges. The question, the guys who survive are the guys who end up becoming the unicorns.
Fully agree. How involved do you get with your portfolio? And let me ask you, how do you add value to your portfolio, the companies you're investing?
Sure. So if you were to ask my wife how much do I get involved, she'd say too much. But in my defense, I think it always depends on the type of business you're looking at, right? There are some entrepreneurs with different maturity levels, and some require different things from you. Some require you to be the big brother, balance sheet, and almost as an advisor and mentor of the business. And some would actually require you to get your hands dirty, to get them from one point to the next, which is a critical point in the business's growth phase. So I think it's never a simple question to ask. It really depends on where the business is, the maturity of the entrepreneurs, and what exactly we see from a strategic perspective in terms of the technology that we're investing in with that organization.
Will you be lead investments?
That's an interesting question. Last year, or maybe 18 months ago now, we went and started our own software development company, Yama Software, which is focused on the fintech side. And I must say, it's been an interesting journey. It's not something that I'd ever saw myself doing, given that, we like to stick to more the investment M&A side of the world. So having done that, would I do it again? I don't think so. I think for us, it's better to collaborate and let the real entrepreneurs do what they do, and we'll support them where we can.
You are early, let's say AB, and do you get involved when the startup you've invested need another or maybe 2 rounds?
I think it's difficult for us to say that because, from an investment firm perspective, we have a very clear view of the types of technologies we want to get invested in, number one. And we certainly know what we can do, especially within our markets, to get those organizations and businesses to where we think we can take them. So for us, we want to be able to know that we can follow our money. I think that's always important from a round perspective. But more importantly, we like to go in knowing that we can be fully funding the growth journey so that they don't necessarily need to seek external investors. Some guys, I'm sure, we haven't experienced it ourselves personally, but I'm sure there are those guys, where you can tell that they're sitting on something so massive that needs a global players, where we'd happily step aside and make way for those type of investors. But for us, especially in the African market, we'd like to be there from the beginning till the end. And unlike most VCs and private equity guys who have an exit strategy, we generally see our exit being the success of the business, whether it's through a listing on one of the major stock exchanges or a massive buyout. For us, we want to support it for as long as we can and add value as much as possible along the way.
Thank you. How do you expect your investments to help your portfolio? Should your portfolio companies have interactions to some extent?
Geez, that's a very good question. I don't know the answer to that question, to be honest, because there are guys where the synergies make so much sense, and you put them in the room and they kill each other. And there are those guys, who you don't personally see the synergies, but they say, wow, we want to speak to these guys because we know they're having a chat with this type of customer, etc. So I think that's something that as an investor, you should always be very cautious in how you handle it. I think that decision should rest with the entrepreneurs themselves. If they see value in the interactions with other portfolio companies, then absolutely you should facilitate that. But I think you run the risk of starting to see the world in your way and interfering with those business plans that you've invested in and starting to interfere with those entrepreneurs' directions. So personally, I'd rather shy away from that unless requested to by the portfolio businesses. We like to keep them independent. What we will do, however, is given that we know the certain markets and call it large customers that we've got influence in, we try to stick to that type of investment strategy and invest in the same environment. For instance, in South Africa, it's the banking space and the broader insurance space. That's where we find our strengths. So any technology businesses that are looking to crack into that, we're having those conversations already on multiple different portfolio companies, and also in some of the startups we are putting together internally ourselves. So I'd say it should not be a one size fits all. I'd rather shy away completely from that.
Now, you don't like this question, I know, but I had to ask, what happens if they fail?
Well, I think that's our job, right? Make sure they don't fail. But and that's an excellent question. And here's the reality. Here's the honest, brutal answer. If they fail, then you better make sure they fail quickly. The last thing you want is to be putting good money after bad money, right? You need to be making, if you've made a mistake or something has fundamentally gone wrong in the assessment of the market and things just don't go your way and it becomes a massive failure, you better fail quickly. You don't want this thing to be dragging on for 2-3 years before you realize that you've backed the wrong horse. So yeah, if they do fail, make sure you start spotting the signs really quickly, and you must call it a failure when it is a failure, and try not to resuscitate a dead dog, if I can call it that.
I mean, what do you think about founders that come to you, they've already failed, and founders, the first founders, they haven't done a startup before, they never failed? Do you think it's going to make any difference?
Again, that is such an excellent question. So from my perspective, I think you as the investor have a very strong and important responsibility on both those different founders. On the first one, the guy who has failed, I think there's a level of comfort that at least he's been slapped around with life. And that's what I mean when I spoke about getting to know the person, the individual, because it's not so much the failure, it's how you deal with that failure and how you bounce back up, right? So for someone who's sitting across the table from me, having had a history of, call it failure, a failure or many failures, their ability to still be continuing and have that optimistic ability to look at life and still challenge themselves, that I'd see as a very strong plus. And more importantly, once you've failed, you know all the signs when something is about to fail again, right? Hopefully, if you've learned your lesson, that is. So from a responsibility perspective, I'd always say that is a good thing and should never be looked at as a negative thing. And on the other side, the guy who hasn't failed, who's sitting across the table from you, I think that's your responsibility as an investor as well, to assist that person so that they don't have to fail, to use your personal learnings and the businesses that you've seen to assist them so that they don't have to do it. Although, let's be frank, this is life. We've all been doing it for quite a number of years, and chances are they will find some failure. Maybe they do not acknowledge, but there's always failure around the corner. It's how you deal with it that matters.
It does. Why do you become an investor?
That's that's an interesting. The money. No, I'm kidding. I think obviously that's important. I think we're not the Red Cross, right? We understand the market that we're playing in, and we see lots of value for growth. And remember, we've got shareholders and other investors who have put their faith and their money with us to go do something important and to go do something big. So ultimately, let's not kid ourselves. It's important that you become an investor to make returns. If you're not an investor to make returns, then you're in the wrong business. I think that's critical. But more importantly, on top of that, I think my passion for entrepreneurs and that entrepreneurial journey, I think it's a beautiful thing, and it's something that's going to change the African continent, especially from a technological perspective. We've got so much inequality, we've got so much poverty. The need to fund good businesses that will create jobs, that will change people's lives, is something that we're very passionate about. And more importantly, finding those technologies that will be the next Googles, the next Facebooks, and the next Apples of the world. I think that the young population of Africa has a real opportunity for the first time in our history that we've got information equality. And wherever you are in the world, you have an opportunity to start and create something that's meaningful and worthwhile that will be used the world over. So that, for me, those are the two passions. Yeah, we want to make returns. We're not a charity, but as well, I think it's important to make sure that the best of entrepreneurs have guys like us in the market who are able to raise capital quite quickly and assist them in getting to where they need to go.
I mean, I do believe investors can play a big role when it comes to equality, when it comes to impact. I mean, a very big one.
Yeah, exactly. So, and I think that's the thing, if you've got alignment in terms of the, call it virtuous stuff and the pecuniary role of an investor, I think that's where you find success. It shouldn't just be one or the other. It's finding that balance and making real change.
I mean, which are the critical points that trigger ultimately at the end your decision to invest?
I must say, for me, it's always going to be the people. it's always going to be the people. Business is about people, right? It's businesses selling to people. There's no such thing as these massive companies that we see. All it is a collection of different people all over the world, whether they're multinational or even a small startup. It's that team ultimately that makes the difference. The ideas are cheap. Everyone has solved something, but I always said, if you've got the cure for cancer or the cure for AIDS, and you're an absolute knob to deal with, we're not going to invest with you. And that's important for us. We just have to be brutally honest with ourselves and say, is this a good person? Is this someone we want to be successful with? Is this someone we want to work with? And is this someone, if things go bad, we'll be able to still get into a room and hug it out and make sure that we stay the course? Those are critical things for me. Everything else, you can write anything on a piece of paper. It means absolutely nothing when the proverbial hits the fan.
That's right. I mean, until you are really a real company. I mean, people are always important, but early stage, they're crucial. Yeah, everything.
Yeah, exactly.
I mean, maybe there is not any perfect receipt, but what can be described, in your opinion, as a great pitch that can convince you?
Wow. So that's a good question. I think for me, and I'm not a technical person, and we've been investing in the technology space, right? So the ability of an entrepreneur or a founder to succinctly describe a problem for me and describe a solution, that's always important. If you can make me feel what you feel in terms of why something is a problem, then I get excited. But a lot of guys will start rambling off and tell you about, this massive problem, which you don't feel, you don't see it as a problem. And you're like, well, they can use this or they can use that, right? So your ability to get me as excited by what you're doing, I think is always important for me.
How important is that the IP belongs to the startup you're investing? If we talk about, technology startup, for example, deep tech.
Yep. I think it's fundamental. We had the same situation with one of our insurtech startups that I mentioned earlier that we've been working on. We had to make a call whether do we use some of the cash to go spend on another vendor, or do we rather invest in creating our own IP? And it became a very easy decision for us to say, well, if anything happens to those guys and we're reliant on them and we don't own that IP, we'll be in big trouble. So let's rather delay the rollout, delay the launch. Let's rather invest in our own IP and make sure that happens. And that will go to anyone we're looking at. If you don't own your IP, I'm not saying we won't have a conversation, but it depends on how critical that IP that sits outside of the organization is. And for us, the fundamental problem that you're solving, if a lot of that IP sits outside of you, then you're just a solutions architect and you shouldn't be starting a company anyway.
What's your suggestion to founders when approaching venture capitalists?
Don't do it. Go get a job.
Leave them alone.
Don't do it. Stay in your job. Don't go VC. I joke, but and this is the reality. Starting a business is tremendously hard, and not enough people say it. The problem with the VC market and the private equity market is we all glorify ourselves and make ourselves seem so important and say, yes, there's opportunity, you can do whatever. And the reality is that's not true. Not everyone is going to be successful. Not everyone has a good idea, even though the founders themselves think it's the best thing since sliced bread. So for me, it's do your homework. You'll find that if you don't, and you can delay your time to a VC, that's probably a sustainable business. The guys who are more interested in getting in front of a VC before they've developed anything or they've proven themselves, those are the guys I think should probably spend a bit more time working. Whereas you can find you'll get a lot done. There's the old saying, beg, borrow, and steal from your family. That's what they're there for. So if you can do as much of the bootstrapping of your businesses, and if you think of companies like Apple, Microsoft, all these guys, you know, there's a reason why they started in their own garages. They believed, they had a passion that they're going to create and solve problems for people. Whereas if you're too busy spending your time in pitches with VCs, you're not building a business. You know, you're not solving problems. So my honest advice is you delay that process as much as possible to when you feel you have something or you can't go further without approaching that market. That's probably the best advice I'd give them.
I want to close with asking you, which are the best sectors, the most attractive, in your opinion, to invest in 2022, and where startup founders, I say, should go?
Yeah, sure. That's a tough question. I wish I had a crystal ball to answer that. But for me, I think so. If we focus on the African continent, fintech is always going to be important. We have a massive, large unbanked population across the continent. We have the youngest population in the world, and we have the fastest growing middle class, well, which should be anyway, over the next 10 to 20 years. So anyone who's looking to solve those type of problems of money moving, banking the unbanked, and making the financial access easier for all sorts of Africans, whether you're a student, whether you're an entrepreneur, or you're big corporate. I think those are the solutions for me in 2020 that are going to come in. I know the whole world is going crazy about the metaverse and NFTs and cryptos and all those. You know, I think for us, we need to focus on solving real world issues, you know, and NFT is not going to put bread on people's table. That's the reality. As much as the metaverse might be a great thing, if you're eating in the metaverse, you're not going to get full here. And these are the real problems we have in Africa. So I'd rather focus on solving that first, and then we can have fun with all the cool stuff that's coming out.
Siphiwe, thank you so much for coming to VC Talk.
It's been my absolute honor and a pleasure chatting to you.
Thank you very much, and take care.